Let's keep watching. The US government is still shut down and the ripple effects are starting to show. Hash rates are surging, ETFs are seeing outflows, and Bitcoin keeps dropping. So at what point is it a good time to buy in? The US government is planning to set up an on-chain AI regulatory police force, which has suddenly made privacy coins explode in popularity. So after Dash, what should we buy to position ourselves for the next privacy coin boom? It's Tuesday, November 4th. This is the BTV Chinese channel. Where is BChain? I'm Michael and we're back in Malaysia's iCity. Let's stick around for our chip. First, let's take a look at the most important 24-hour data in the crypto world, brought to you by Nexus. Headline: NEXO, an Australian compliant exchange. Scan the QR code on the screen to download the exchange. Not only can you make money, you can also borrow money and even convert the borrowed funds into USDT. After scanning the code, you can get trading fee discounts on perpetual contracts. As your screen level increases, your discount will also increase proportionally, making your wealth safer and more efficient for sustained growth. Alright, let's look at the headline. The US government is really on strike this time, and it's going to last a long time, not just a short-term thing, but a major strike. Goldman Sachs' chief economist, Alec Phillips, couldn't help but issue a warning. What did he say? He said that if this shutdown continues, the US could face the biggest economic shutdown in its history. The last shutdown was in 2019 and lasted only 35 days, but this time it's going to last 6 weeks. GDP will drop by 1.15 percentage points, and recovery won't happen until early 2026. Right now, $1.7 trillion of the budget is frozen, which accounts for 1/3 of the annual expenditure. Thousands of federal employees are on extended leave and they're not getting paid. The two parties are still arguing, and the situation is as chaotic as ever. As soon as the market sensed things were going wrong, Bitcoin immediately started to tumble, dropping below $110,000 and hitting a low of $105,000. ETF funds pulled out even faster than a speeding train. Last week saw a net outflow of $802 million, with daily trading volume at $25 billion. Yesterday, another $187 million flowed out. The Ethereum ETF also experienced a net outflow, getting dragged down as well, with $135 million making a run for it. Right now, Wall Street's mood is like the progress bar on Biden's budget proposal, stuck at 99%. If you want to wait for a market interview, you'll have to wait for Congress to finish their fight, then show up to work with their briefcases and get started. What do the on-chain data show? Short-term Bitcoin traders are quietly returning to the battlefield. Let's look at these lines on the chart. They actually represent the trajectory of people's sentiment. The purple group, those holding for 1 to 3 months, are typical short-term players who go whichever way the wind blows. They panic when the price drops and rush in when it rises, shown by the blue line. In this round, the 3 to 6 month holders are truly smart. When their funds increase, they cash out, and when losses mount, they start reducing their positions. Now, seeing the blue line start to rise again indicates that the smart money is slowly coming back to lay out their positions. The price and the cost line are getting closer and closer, and the market sentiment is also approaching a turning point. If one day the price really dips below the blue line, that will probably mark the start of another wave of intense shakeouts. But that moment is often the true beginning of a new market trend. The veterans are all buying the dip, while the newcomers are panicking and complaining. The whole story is about to play out all over again. Alright, let's check out the latest situation in the mining sector. To sum it up in one sentence, security reports are fine, but wallets are tight. In October, everyone saw the total Bitcoin network hash rate surge to 1.13 Zeta, which is a historic high. It sounds impressive, but miners' wallets are hurting because as the hash rate rises, profits are falling. The hash price has dropped by 12%, and the earnings per unit of hash rate have fallen from $52,000 to $48,000. There are more and more mining machines, but the ways to make money are getting fewer and fewer. Since the 2024 halving, miners' income has been cut in half, electricity costs are soaring, and the pace of upgrading and replacing old and new mining machines is getting faster and faster. Small miners can barely catch their breath. In October, $19 billion was liquidated, and prices have been through many ups and downs, forcing miners to sell their coins just to survive. Large mining farms have seized this opportunity to expand, and capital has started to enter the entire mining industry's Hunger Games. But don't forget, a new all-time high in hash rate means the network is more secure and stable. Although profits are thin right now, once the coin price rebounds, hash rate players will be able to turn the tables again. So what about right now? Flypa offers a solution to the problem of reduced hash rate for Bitcoin miners. If you're also mining Bitcoin, feel free to scan the QR code on the screen and chat with Shizuo. Please give us a like and turn on the notification bell. We'll help you keep up with the latest news in the Web3 world that's closest to making money. This month marks our 6-year anniversary celebration. As long as you join our YouTube Gold membership during this month, we will airdrop USDT to you, as well as give you an exclusive channel t-shirt and a copy of my book. Alright, let's look at today's headlines. Right now, the entire market is booming, but Bitcoin and the crypto world seem to have entered meditation mode. Look, the S&P has hit a new high, the Nasdaq is soaring, gold has surged past 4,300, and tech stocks are taking off. But the crypto market is like it's disconnected from the internet, completely motionless. While everyone else is making money, Bitcoin is still sitting in place meditating. The community is about to explode. So is it just playing dead, or is it gearing up for a big move?
Bitcoin briefly spiked above $105,300, hitting a new two-week low. It's currently attempting to break through the downward trend line and is now quoted at $106,575. If it can regain a foothold above $108,000, market sentiment may improve and kick off a new round of bullish momentum. However, if it faces resistance and falls back, it could once again test the $103,000 support level, putting buying strength to the test.
That's equities, the things behind us, real estate, precious metals, fine art, all of the things that we own. Half of that we're using as a savings account. We're owning the portfolio of companies or the art or the house to actually try and preserve wealth into the future. I think Bitcoin's going after that market. It's going after a market of $400 to $500 trillion.
Those traders, Jody Visser, pointed out that the market is wrong. It's not that Bitcoin lacks momentum. Instead, it's undergoing a traditional finance-style IPO repricing. In the past, it was closely correlated with tech stocks. You could predict its movement by looking at the Nasdaq, but since December 2024, it has started to decouple. Visser believes this is like early shareholders adjusting their holdings after a company goes public. It's a healthy turnover. It's not a downturn.
Now, imagine if we could turn back time to 2010. What if you were that nerd mining Bitcoin in your dorm room using an old discarded laptop? Or if you had gone all in and bought Bitcoin when it was just 100 when? Or maybe back then you were laughed at as a crypto lunatic, but you made it through the Mt. Gox collapse, survived the mining farm crackdowns, weathered the crypto winter of 2018, enjoyed the market halving during the pandemic, and withstood the media scaring you again and again, saying this is just a bubble, a pyramid scheme, a digital Ponzi project. A decade or so later, you'll realize that when you look back, the times have changed. The price of crypto has gone from 3 digits to 6 digits, from being considered illegal finance to becoming part of America's national strategic reserves. You went from being laughed at to being studied and admired by everyone, becoming a crypto OG. Now, when you log into your account again, you can just click your mouse to choose which yacht to buy, pick the color of your private jet, and even imagine being with whoever you want. Anything seems possible, right? So sometimes I think, what if a few of us old crypto OGs who mined together back in the day teamed up and rented out that billboard at the Manhattan airport and wrote on it, back then, I really did buy it. So this isn't just imagination, it's a kind of commemorative ritual. After all, the story of Bitcoin, in my view, has never been about revenge or getting back at anyone. It's about the compounding of conviction. When the whales sell their Bitcoin, I don't see it as them running away. It's them cashing in on the faith they had back then. Let's toast to the options in life together. After all, there's no such thing as if only I had known. The days of saying, if only I had bought some coins back then, or if only I had mined Bitcoin on all my computers back in the day, are already behind us. Now, we have to focus on the present. The current situation is that the crypto world is no longer considered illegal finance. Now you can trade legally through KYC and regulatory compliance. But this also brings up a problem. People are concerned about privacy. If it's not anonymous, then it's not KYC. If it's not anonymous, then it's not Web3. The exchanges are watching your withdrawals every day, trying to figure out what you're doing and where you're going, like a bunch of Sherlock Holmeses who can guess where you sent your coins and what you did just by tracing your address on the blockchain. Plus, the US Treasury is planning to use AI to monitor digital identities. They're basically turning into internet police. But have you noticed that the stricter the regulations and the tighter the KYC, the more people start to value privacy? So it's no surprise that privacy coins are becoming more and more valuable.
The privacy sector has seen a strong rebound recently. ZC is up 6.1% in 7 days, soaring 68%. ZK is up 53.9%, and the total market cap of the sector has surpassed $23.5 billion. According to the latest report from A16Z, privacy protection is returning to the spotlight in the crypto world, and it will become a key prerequisite for large-scale adoption. Meanwhile, in 2025, Google searches related to crypto privacy have surged, showing a clear increase in market attention.
What other coin can I invest in? My favorite, XMR, Monero, the little beauty. Just yesterday, I was arguing with a friend who said that people use Monero for money laundering way too much. Well, of course, if it couldn't be used for that, why would I be holding it, right? This is a real essential need for people. It's a hard use scenario. As long as there are people who want to hide their money, avoid taxes, or engage in some kind of underground transactions, this sector will never disappear. So protecting financial privacy is the first step in reclaiming your fundamental human rights. Start by safeguarding your privacy. We know that losing all of our rights always starts with losing our privacy. So when you have concerns, when you're unsure whether the source of your funds is legitimate or not, before transferring them to a centralized exchange, make sure to go through a mixing period. Don't wait until your account is frozen to start looking for connections or favors to solve these problems. The favors and costs involved in resolving these issues are far higher than the small fees you pay for mixing, so weigh the pros and cons carefully. That's why Monero, the little beauty, might just be the next token to skyrocket in value. Here, there are legends of getting rich overnight, but also carefully crafted scams. This is a chaotic, lawless, dark forest, but it also nurtures the spark of hope that leads to the light. The destination of faith is freedom, and the endpoint of consensus is equality. BitcoinTV, guiding you through the fog to see the future and helping you gradually become wealthier together. From mining to billion-dollar deals, mining companies are all embracing the AI wave. Who will win this high-stakes gamble? Falling in love with the explosive 19.8 billion DeFi, which is crazily harvesting traditional blockchain, is there really no hope left? Let me tell you, the mining industry really can't keep up anymore. The profits of Bitcoin miners are decreasing at a rate of 10% every 25 days. As you can see, many mining companies that focused on mining have started to pivot and work for AI. When it comes to AI or computing power, it comes down to who has cheaper and more stable electricity. In 2023, many mining farms relied on providing computing power for AI. They started making money. For example, Mara developed an immersive cooling system specifically for AI use, and Riot wasn't to be outdone. They got a head start by moving into high-performance computing. The most explosive move was directly signing a $3.7 billion mega deal with the Google ecosystem. They first signed a 10-year contract with an option to renew for another 5 years. So you see, this is a story about miners who are no longer mining but have started running facilities for AI instead.
Providing AI cloud compute to end customers, the key advantage we've got is that we have the data centers, the power, and the land. Today, we are actively installing these GPUs every day to meet the demand.
Bitcoin mining company Aaron announced a $9.7 billion 5-year GPU cloud computing mega deal with Microsoft. Microsoft will pay a 20% advance to secure Nvidia GB300 computing power at Aaron's data center in Children's, Texas. Aaron must invest $5.8 billion to build a 200-megawatt liquid-cooled facility, powered by its own 2.9-gigawatt clean energy network. The company will also partner with Dell to deploy the GPUs, and the project is expected to be fully operational by 2026.
For news like this, everyone should try to share it as much as possible. Let those big capital players who are grabbing Bitcoin hash power know that mining AI is more profitable than mining Bitcoin. Let's leave some Bitcoin hash power for others. Small and medium miners really can't hold on much longer. Is AI a hot trend? Yes, it is. Is there a bubble? There is. And as a retail investor, as a small or medium investor, you need to understand that the AI trend has nothing to do with you. Other than paying a monthly subscription for ChatGPT, you really don't benefit from AI at all. At most, you can buy some of its stocks, right? But Bitcoin mining is something everyone can participate in fairly. Even though the competition for hash power is fierce, you still earn real tokens every day. But with AI, if mining operations also shift to AI, then small and medium miners really won't have any way to survive. Of course, we also believe that this bubble will eventually follow a curve, from boom to bust, returning to normalcy. But before that, the market will have to go through a period of FOMO. To be honest, now that we're in the fourth quarter of this year, if we look at the on-chain economy, it's more competitive than ever. In fact, the entire sector has quietly started to change. The era when centralized exchanges dominated everything is slowly shifting. As you all know, this year, on-chain transaction fees have soared to $19.8 billion. What's even more unbelievable is that DeFi has actually made a comeback and taken the lead, contributing 63% of all transaction fees and directly surpassing the established blockchains. After all, what matters now is having more mature technology, lower transaction fees, and faster speeds. Now, DEX perpetual contracts are becoming more and more attractive. It's even said that the New York Stock Exchange is planning to adopt perpetual contracts from the crypto world. What does this mean? This is innovation forcing tradition to change. So if we look at the traditional established blockchains now, just the income from centralized exchanges has dropped from 56% to 22%. Their glory days are clearly over. To be honest, that's the current state of the crypto world. It's all thanks to new applications and stablecoins holding up half the sky.
Technological upgrades are now the main driver of on-chain economies. After Ethereum and other blockchains scaled, average transaction fees fell by 86%, while daily transaction volume rose 2.7 times to 169 million. The number of revenue-generating protocols jumped from 125 in 2021 to 969 now.
And I think, of course, it requires a lot of money coming into the market, but we're seeing that there's money coming in now. And of course, with these shorts being stopped out of the futures market, plus this gamma from the options market, I think the market is actually gravitating toward the next higher strike, which is the 130 level, and then potentially the 150,000 level.
Although the top 20 protocols still contribute 69% of the fees, the landscape is being reshuffled, with new players in the Solana ecosystem like Radium rising, while established leaders like Uniswap are seeing their market share decline. Innovators are rapidly replacing incumbents. Asset tokenization, Japan wallets, and consumer apps are new growth engines. Japan fees have surged 400% year-on-year, and RWA, real-world assets, have seen a 4-year compound annual growth rate of 235%. Since late 2024, wallet apps like Coswork have quickly generated profits through trading.
Some media outlets say that the happiest people are the investors, because according to the data from the third quarter, investors directly received $1.9 billion. But I want to ask everyone, after these 3 quarters, have you actually made money? Share your experience in the comments. Of course, there have indeed been changes in regulation and legislation. Europe introduced the MyCA Act, the US launched the Genius Act, and there are now tokenized funds. Even institutional investors in stocks are no longer afraid to test the waters. So, as for policy, I believe that next year there will still be support for on-chain fees. Adding another $30 billion or so shouldn't be a problem. So what's the situation now? Overall, in the crypto space, the protocol layer still holds about 91% of the territory in terms of applications, but the market has already started to reprice Web3. So if DeFi becomes more and more cost-effective, to be honest, in the future, evaluating projects won't be about how strong your background is or who's backing you, but rather whether the project is profitable and whether its fees are stable. Has it achieved decentralization or not? Okay, give your report quickly.
Wei Shin said that what was written back then was an epic pitfall. The computing power could be multiplied by 50 times, and still no one would use it. The suggestion is to just replace it directly. Stop holding back the entire network. The strategy is way too aggressive. Issue euro-denominated shares to raise money to buy coins. Even a 10% dividend can't stop him from accumulating. He was about to add 397 more coins, bringing his total to over 640,000 bitcoins. He's definitely the top hoarder in the network. HSBC CEO Noel Quinn stated that anyone pretending to be asleep in the face of disruptive technology is taking a big risk. At the 2025 Financial Leaders Summit, he said missing out on innovation is asking to be eliminated. Kraken's head of derivatives, Alexia Theocarou, revealed that now, players in Europe can directly use cryptocurrencies as collateral to trade derivatives. It's both compliant and flexible. Crypto assets are officially entering the regulated financial sector. OpenAI is spending $38 billion to buy computing power, officially teaming up with Amazon. This is a 7-year long-term contract and marks the first deep collaboration between the two parties. It also shows that the current AI war is not about algorithms, but about whose cloud is more stable and who has more money.
Today's chicken soup is toxic, truly toxic chicken soup. Let me teach you all how to insult people. Let's learn from the ancient or modern literati. How did they insult others without using foul language, yet still vent their anger, right? Let's start with the nation's #1 sharp-tongued wit, Chen Zhongshu. If you meet someone who is extremely ugly, so ugly that they have no redeeming qualities, how would you put it? How did Chen Zhongshu put it? He said, when it comes to ugly people, looking at them closely is a kind of cruelty. You don't dislike them, but they're completely useless. Not a single curse word in there. How did Mu Xin put it? He said, some people's faces are as ugly as a miscarriage of justice. And what did Eileen Chang say? Are you young? It doesn't matter. You'll be old in a couple of years. Yang Jiang said, your biggest problem right now is that you haven't read enough books, but you think too much. Lu Shun said, As a human, you want to become an immortal. Sitting on the ground, you want to reach the sky. And how did Shakespeare put it? He said, I want to spit on you, but I'm afraid it would taint my saliva. Liang Shiqiu said, it's one thing to grow old, but why go to the trouble of becoming a demon? Kanshu said, what a big face you have, enough to hold thousands of mountains and rivers. Qian Zhongshu said, what is refinement? It's that I don't expose you in front of others or behind their backs. You keep talking about my faults, but it's not your arrogance that makes me silent. It's your ignorance that leaves me speechless. Not everyone possesses refinement. Refinement is self-restraint, it's respect for others, and it carries the meaning of equality between people. So, when you encounter someone without refinement, you don't have to force yourself to be so tolerant. If you throw these words back at them, you'll feel great. Don't bottle it up and hurt yourself inside. All right, that's all for today's program. We hope to lead everyone through this process together, to hustle together, and gradually become wealthier. So all the membership benefits are included here. If you join as a member this month, you'll get a USDT cashback, plus all the channel's commemorative gifts will be sent to you. See you tomorrow.